gold was money. So you didn't have a bull market or a bear market. It was fixed to the dollar.
In this interview, Jim Rickards discusses the potential for gold to reach $15,000 by 2025 based on historical trends in bull markets. He highlights that while an 80–90% increase is significant, previous bull markets have seen gains of 2,000, 700%, and 670%. Rickards emphasizes his belief in a long-term bullish trajectory for gold and suggests that temporary fluctuations should not deter investors, as buying opportunities arise during downturns. He advises viewers to consider the math behind percentage increases, indicating that smaller dollar increments become more frequent as prices rise. Despite accusations of bias, Rickards asserts that he does not profit from advocating for gold purchases and positions himself as an analyst rather than a dealer. He encourages those who have not yet invested in gold to reconsider, arguing that the current gains are only a fraction of what could be achieved in the future.
It's going up. It's going up a lot. And let me just back that up a little bit. Because that's easy to say, I don't say things like that without a lot of analysis. There are 3 different ways to think about it. One is just some technical analysis. This is the 3rd great bull market in gold in history. And when I say history, I'm only going back to 1971. Because prior to 1971, gold was money. So you didn't have a bull market or a bear market. It was fixed to the dollar. The people who banged the tail and said, give me a gold standard. And they will be careful what you wish for. Because in gold standard, you're not going to make any money on gold because it's fixed as pegged to the dollar. You, if you want to make money on gold, you would actually be against a gold standard because they keep screwing up the currency and the gold goes up. But we had a bull market from 1971 to 1980, and gold went up 2,700%. Then we had a bear market from 1980 to 1999, and gold went down from $800 to under $50. So let's do the math. It's 60, or 70%. Then we had the second great bull market from 1999 to 2011, and gold went up 670%. Then we had a bear market. It's funny how these things go in cycles from 2011 to 2015. But you can call the bottom. It was December 16th, 2015. Gold was $1,050. Now some talking US dollars. That was the bottom. And I saw it at the time, and I called it at the time based on a conversation I had with Jim Rickards, who's the greatest commodities trader in history. And we were down in Dominican Republic at Casa de Campo during the bear market. I said, Jim, I think about gold. He goes, well, I own it, but I'm not buying more at the moment. I'm waiting. I'm not selling, but I'm not buying more. I'm waiting. And he said to me something that just hit me right between the eyes. He said, gold is going to the moon, but no commodity goes to the moon without a 50% retracement. Along the way, there comes a time when it drops 50% and then is like the second liftoff, and then it goes to them. Now take the bottom. In 1999 was $250. Now the top's in August 20. So that's $1,750, half of that. So 50% retracement will be down at 25. 9 is C25 and 75 being, that's close enough for government work, as we say. So we had, when I saw 1,050, I talked to Jim Rickards about this earlier when I said, okay, there's your 50% retracement using 25 O's. You have to have a base using 250 as your baseline up to 1,900. Take that gap down to 2%, boom, 1,075. We were 1,050. So that's a low. Now it's getting close to 1900s. Again, actually, on an intraday basis, I think he's just kind of kissed the all-time high, was like right there. So there's the full retracement of the bear market. But this bull market, the 3rd great bull market, started December 2015. We are up almost 90%. You go from 1,050 to 1,900. That's about 90%, 86, 87%. But bear in mind the last 2 bull markets, remember what I said, 2,700% and 670%. So 80% is 85% is great. But when you get into like 600, 700, 800% or 2000%, you're talking about $15. 0.0000 by 2025. So if we just did the average of the two prior bull market, I'm not even talking about the higher of the two. Take the two bull markets, average the duration, the game, and then apply it to December 2015. You get to 15. The exact time is $15,000. By 2025, $15,000 now is by 2025. But people got last 4 years was like fibers, was like, yeah, but to get to from 2,000s to 15,000, you got to go 3,000, 4,000, 5,000 in 6 days. You can make a ton of money. That's where it's going now. Could it go down tomorrow? Sure. I mean, it goes volatile. I don't get too hung up on it because I'm kind of a buy and hold person. You know, I don't get too euphoric when it goes up, but I don't get depressed when it goes down. In fact, when it goes down, I like to see it go up for our listeners and our readers. But personally, I don't mind when it goes down because you can buy more at a cheaper price because I know it's going up. I know where it's going. So the answer is just a little. Again, 6th grade math is usually sufficient. When you get to higher levels, a fixed dollar increase is a smaller percentage increase. So people go, oh, we went from 1800s to 1900s, went to 2020, 120, and that's a big deal. Good for all this. But those $100 increments get to be more and more frequent and more common because they start looking like 1/2 of 1%. 1 out of 1%'s not a big deal in the market. You're going to see that on a daily basis. So my advice to people, of course, is buy gold. But I said that 1,000, 100, 1,000, 200, 1,000, 300, 1,000, 400, 1,000, 500, 1,000, 600, I've sent it all along. And people don't buy it. People also accuse me. They say, well, Jim, you're just talking a position. You know, you're just trying to sell gold. I'm not a dealer. I don't make any money if you buy gold. Good for you. But I'm not in the business. I'm a writer. I'm an analyst. But I'm not a gold dealer. I'm actually one of the few analysts apart from yourself and a few others who are not gold dealers. But I think that gives you more credibility because you're not selling gold. You're understanding gold. But for anyone who hasn't bought it yet, because people denial is a powerful thing, they'll say, well, I missed the boat. And now it's up the side, it's going to go down. You haven't missed the boat. I mean, again, 8,080, 90% is a good run, but this is going to go multiples of that.